This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, as always, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. So let's have a look at the Nasdaq100. Nasdaq100 currently down 0.6%, which isn't actually too bad considering the fact that Meta, otherwise known as Facebook, is down 24%. This was on a huge miss when it comes to earnings per share. I think their revenue slightly beat, but yeah, their earnings per share come in a lot lower than expected, and that stock has just been battered. And I think it's just mainly investors, long-term investors that have held on to that stock for over 5 years most probably, and they just don't agree with Mark Zuckerberg's vision with regards to the metaverse. So they're obviously using the earnings call as an excuse to get out of that stock, and that's kind of what I did warn yesterday. I said, if the numbers come in bad, you're going to see many investors taking that as an opportunity to call it a day and get out, because they're spending billions. I think it's around 15 billion on this project, and it's going to cost a lot of money, and it's not going to pay off for a long time. So it's going to take almost a decade. But let's quickly talk about the ECB. We had the European Central Bank hike interest rates by 0.75 basis points. You've got the dollar showing lots of strength today against other currencies. We've actually backed off in the past couple of minutes, but we did go and retest that 50-day EMA. The dollar's come under some pressure the past couple of trading sessions, guys, but nevertheless, look, we're still trading within this uptrend. And then more importantly, look at the 10-year yield. We were in the green earlier on this morning. In fact, we've just gone into the green now, but even though the last couple of days we've seen this massive decline in yields, we're still trading in this aggressive uptrend that we've been in for some time. And this is what I expect to happen. I expect us to have one more last push to go and test the highs that we achieved just a few days ago. And then as we get into, let's say mid-November going into the end of 2022, that's when I expect this trend line to break. And I think that's when we could see a very strong rally in the stock market. But it's a very bizarre market that we find ourselves trading in right now. For example, we've got the Dow trading significantly higher, and that's because lots of cyclical stocks, airlines, restaurants, for example, they're all coming out with fantastic earnings. And then on the other hand, we've got technology, which is massively underperforming. But one thing should be noted is that the outperformance in these cyclical stocks should not be seen as a good occurrence, because the Fed's just going to see it and think, okay, well, these companies are still doing very well. We've still got companies like Visa, for example, coming out and saying that they see no signs of a weakening consumer. So the Fed's going to take this as an opportunity to come out and hike interest rates even more aggressively. We just had the GDP out today as well, I should mention, and that coming at 2.6% versus 2.4% expected. Again, it gives the Fed another reason to become more hawkish. So I feel like within the next day or so, we are going to see a massive rollover here in the stock market as we see the 10-year yield bounce and, of course, the dollar strengthen. I really do believe that all three of these indices have started to become rather overbought, especially the Dow now. And I really do believe that this Nasdaq 100 could trade back down towards at least 11,000.